welcome to the deep dive. We're jumping into the fascinating world of Palantir Technologies. We're focusing on a really dynamic period, the week spanning May 30th to June 5th, 2025. We've gathered up articles, reports, financial updates from that specific window to, cut through the noise and figure out what truly mattered for this company and, well, for you investors.
Yeah, that week was a real snapshot of Palantir's current state, kind of a mix of powerful forward momentum and some significant cautionary flags. The stock saw major moves, definitely driven by strong fundamentals, but the whole conversation around its value really intensified. Our goal here is to distill the most important points.
Okay, let's start by unpacking that positive momentum. It was pretty undeniable. If you were following PLTR during that week, you saw the stock trading right up near its 52-week high. And looking back, the performance has been, well, incredible returns of around 490% over the past year. Huge numbers.
And just in 2025 alone, we're talking about roughly 75% growth year-to-date. On May 30th, it even touched a new all-time high, $132.04. I mean, that kind of trajectory demands attention.
Absolutely. And what was fueling that impressive climb? A major driver, according to the reports, was the company's strong financial performance in Q1 2025. Palantir reported revenue of $884 million. It represents a 39% increase compared to the same quarter of the previous year.
That Yahweh growth.
And importantly, that figure beat market expectations by $21 million.
So they didn't just grow, they grew more than analysts expected.
Precisely. And the profitability picture also improved significantly in Q1. Net income more than doubled, reaching $214 million.
Wow.
Seeing both top-line revenue growth and bottom-line profit expansion is, well, it's a potent combination for investors.
Adding to the positive outlook, the company actually raised its full-year revenue guidance, suggesting they see this strong performance continuing.
The sources really pinpoint the U.S. market as a key engine. We saw figures showing U.S. commercial revenue surging by a remarkable 71% year over year.
71%? That's huge.
While U.S. government revenue wasn't far behind, growing to 45%. That kind of acceleration, particularly commercial, is sort of a newer story for them, isn't it?
It is. They're historically known for government work, but that government growth was also specifically highlighted with more detail. Reports mention the increasing adoption of Palantir's platforms, particularly their Foundry tool, across various U.S. federal agencies.
Like who?
Well, we're talking critical areas like the Department of Homeland Security and Health and Human Services expanding their use. The fact that these essential government bodies are deepening their reliance on Palantir's software, that's a significant signal of its utility and maybe its stickiness.
And like you said, it's crucial to note it's not just government anymore. The commercial momentum is incredibly important.
Yes.
Reports during that week, around June 5th, detailed several new strategic partnerships. They announced collaborations like one with Bolt.
Right, for e-commerce payments.
Aiming to integrate Palantir's AI into their system for an AI-powered Checkout 2.0. Another partnership was with teletracking.
Healthcare operations.
Using Palantir's AI platform, or AIP, to bring AI insights into hospital management.
These examples demonstrate how their core AI platform is finding applications across very different industries. That speaks to its potential for wider adoption.
And financially, beyond just revenue and profit.
Looking at the broader financial health, the information pointed to strong underlying stability. While, yes, some areas like R&D and sales still have high costs, a key metric noted was a very healthy operating cash flow margin.
Okay, what was that?
42.8%. Operating cash flow margin is basically a measure of how efficiently a company turns its sales into actual cash that's available for reinvestment or paying down debt. A high margin like that indicates the core business is generating cash effectively.
Now, here's where the conversation gets really interesting and perhaps a bit more challenging for you as an investor considering this company.
Right.
Despite all that powerful momentum we just discussed, the revenue beat, profit growth, exciting partnerships, the information you shared universally flagged a major point of caution: valuation.
That's the critical balancing act the market is grappling with. While the growth is strong, the analyses consistently described Palantir's valuation as high or even a burden.
Let's talk numbers.
The multiples cited were significant. Some sources pointed to it trading at over 75 times its estimated 2025 revenue and a staggering 175 times its estimated EBITDA.
Whoa, those are big numbers. Can you quickly break down what EBITDA is again and why those multiples are considered so high?
Good point. So EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's basically a measure of core operational profitability.
Right.
Investors look at multiples like price to EBITDA or price to revenue to see how the market's pricing the company relative to its performance now.
Yeah.
When a stock trades at, say, 75 times revenue or 175 times EBITDA, it suggests investors are paying a very high price today based on expectations of massive future growth. It implies a huge amount of optimism is already baked into the current stock price.
Got it.
Other sources offered slightly different but still elevated multiples, like 18.5 times forward revenue, that's expected revenue over the next 12 months, and 50 times free cash flow. Regardless of the specific metric, the consistent message was that the price-to-fundamental ratios were very stretched.
So with that picture, strong fundamentals and a very high price tag, what were analysts saying, according to the info you shared?
Well, the analysis highlighted a divergence in opinions, which is, typical, but with a noticeable lean towards caution.
How so?
Many analysts were noted as maintaining a hold or neutral rating on the stock even after those strong Q1 results.
Interesting.
And interestingly, many of the price targets cited were actually below the stock's trading price during that week. Ranges like $70 to $100 were mentioned. Some targets were raised, maybe to $110 or $130, but still.
Suggests they didn't think it was a buy right then.
It suggests that even analysts who saw the improved performance weren't necessarily convinced the stock price warranted a buy at its current level. However, there were more bullish takes. Loop Capital, for instance, was cited with a buy rating, pointing to the strong fundamentals and execution. But then on the flip side, RBC was mentioned with an underperform rating, likely due to those valuation concerns outweighing the positives.
What about activity from people inside the company, insider sales?
Yes, insider activity was noted. The sources mentioned co-founder Stephen Cohen had made significant stock sales earlier in the year, February-March timeframe.
Okay.
More recently, specifically during this week, the chief accounting officer also sold shares. But it was important that the sources provided context for this latter sale,
Which was?
clarifying it was for tax withholding purposes related to vesting restricted stock units, or RSUs.
Oh, standard procedure sometimes.
Exactly. RSUs are common compensation. When they vest, a portion is often sold automatically for taxes. The sources framed this sale as regular, non-discretionary, distinguishing it from, say, sales that might signal a lack of confidence.
Gotcha. Beyond valuation and insider moves, what other potential headwinds or risks did the sources point out?
Several other factors were mentioned. One is just the potential for short-term stock price volatility, especially after such a rapid run-up.
Makes sense.
The sources noted even during this week, there was a 3% dip on June 4th, partly attributed to profit-taking. Investors locking in gains.
Okay, what else?
Another point was uneven regional growth. While the U.S. is strong, there were suggestions that performance, maybe market penetration in Europe, might not be meeting expectations. That could drag on overall global growth. Broader macroeconomic headwinds were also listed as a risk. If the economy slows down significantly, corporations might cut back on spending, maybe including new AI implementations.
Which could hit Palantir's commercial growth.
Potentially, yes.
And given Palantir's history, politics and past controversies often come up, right? Did the sources mention that?
They do. The reports specifically noted that Cathie Wood's ARK Invest-selling shares earlier had been reported in the context of these surveillance program controversies.
Interesting connection.
So while the sources don't take sides, they acknowledge these as potential external factors that could impact the stock.
Anything else on the risk front?
Finally, yes. Despite the strong revenue growth, the sources reiterated that operating margins, while improving, are still lower than some comparable software companies.
Why is that?
Partly due to high costs in R&D and also sales investments needed to land those big contracts. Also, historical data was cited suggesting Palantir's stock has sometimes shown more vulnerability during broader market downturns.
Okay.
A company that is currently executing well and benefiting from significant tailwinds. There's undeniable momentum.
Right.
Strong growth in key U.S. markets. Financials beating expectations, expanding partnerships, showing tech versatility, and high demand reported for their AI platform, AIP.
But, and it's a big but, that exciting growth story comes packaged with significant considerations for anyone interested in the stock.
Exactly. The most prominent caution flagged across the sources is that very high valuation, meaning it implies the market has already priced in a substantial amount of future success. This high price tag, coupled with those specific risks we discussed, volatility, regional performance variations, macro impacts, political scrutiny, margin pressures it requires investors to approach with a clear understanding of the downsides as well as the upsides.
It feels like the core challenge presented by these sources is figuring out how to weigh that compelling growth potential against the significant price you have to pay today and, well, the potholes that could appear.
It is. I think the key takeaway we can distill from the material is that while Palantir's fundamental business appears strong and their growth trajectory, investors must critically evaluate whether the current valuation level is justified and sustainable. They need to watch closely how successfully Palantir continues to expand market penetration of their AI tech globally, and, importantly, their progress towards improving overall profitability margins, not just growing revenue.
Given this powerful mix of strong performance and growth highlighted in the sources, alongside those equally strong warnings about valuation and risks, how do you personally weigh that balance between Palantir's potential and the price the market is currently asking?
It's certainly a situation that demands careful thought and analysis, looking beyond just the headlines. Yeah.
Thanks for joining us for this deep dive into Palantir's recent news. We really hope breaking down these sources helps you feel much more informed about that busy week and what it signifies.
Okay, let's dive in. If you've been watching the markets lately, you've probably seen Palantir making some serious waves.
Yeah.
It's been on a really wild ride, lots of big swings. And if you're newer to investing, figuring out what's actually happening can be, well, pretty overwhelming.
It really can. There's just so much noise around stocks like this.
Yes.
Separating the signal from the noise, especially when you're starting out,
Yep.
that's the challenge.
Exactly. So that's what we're doing today. We've gone through a whole stack of sources, articles, analysis, recent data, all focused on Palantir, looking back from 2022 right up to basically now June 2025. Our goal is to cut through that noise, pull out the key insights, look at the ups and the downs, and really help you understand the main things driving this stock.
Okay, let's do it.
All right, so let's kick off with the positive side, the recent momentum, especially heading into mid-2025. The sources show Palantir hitting some significant new highs. We're talking like $137 to $139 reported around June.
Yeah, that's a big jump. And looking year to date, around June 11th, the sources said it was up over 80%. That kind of gain definitely gets noticed.
For sure. So what's fueling this, according to the materials? A huge piece seems to be their AI platform, AIP. There's a lot of market optimism about it.
Definitely. AIP comes up again and again. Businesses want AI solutions, and Palantir's platform is seen as a key way to deploy them. But it's not just AI.
Right.
Their government business is still very strong. Big contracts, Department of Defense, And there was mention in the sources of potential new deals, too, like with Social Security or the IRS. We're just relaying what the sources mentioned there.
Good point. And importantly, the sources also highlight growth beyond government. The U.S. commercial side seems to be doing really well.
Yes, one source cited, I think, a 68% year-over-year increase there. That's significant because it means less reliance just on government deals. It shows broader market acceptance.
And the financials look better, too. Q1 revenue was up strongly, like 39%.
Exactly, hitting $884 million. And crucially, that marked their 7th straight profitable quarter.
7 quarters, yeah. That's a milestone. Shows the business model is maturing.
It does. And they raised their forecast for 2025, expecting about 36% growth, plus record operating income and free cash flow. Those are good signs about the business's health.
Okay, so solid business performance, AI, excitement, government strength, commercial growth. But the sources also mentioned this meme stock kind of characteristic. Lots of retail investor interest.
Yeah, there were reports of big inflows from retail investors, like $170 million mentioned. That kind of enthusiasm can really push prices, adding to the volatility.
So that's the upside. Strong story there. But, and this is crucial, the sources spend a lot of time on the other side of the coin.
Right, then that's the valuation, the price of the stock. It's just very high.
High valuation. Okay, let's break that down simply. We see things like PE ratio around 210 to 265, PS ratio near 100. What does that mean for someone new?
Well, think of PE as the price you pay for $1 of the company's current profit. So 200 means paying $200 for $1 profit. PS is similar, but for sales. Paying $100 for $1 sales.
And compared to average stocks?
It's dramatically higher, much, much higher than the typical S&P 500 stock. What the sources are saying is the price today already expects massive future growth, maybe even unrealistically massive growth.
So you're paying today for perfection years from now?
Kind of, yeah. It's baking in huge success. And that's why some analysts remain cautious, like Sedini keeping a neutral rating with a target below recent highs. Even though they see the good business performance, it's that disconnect.
That tension is key. And the sources also flag the volatility, right? The big price swings.
Definitely. Palantir is known for it. Very sensitive to news sentiment. Remember, early June 2025, the stock dropped, 13% in 2 days? Linked to CEO comments, news reports. But then it bounced back fast.
Shows how sensitive it is. That can be tough for new investors. What other risks came up?
Competition, for sure. The AI space is getting crowded. Google, Microsoft, lots of startups. Palantir is good, but it's a battle.
It makes sense. High demand, but also high supply of providers.
Exactly. Plus, the sources mention the ongoing privacy and surveillance stuff, mainly around government work. That can be a risk factor. And some international commercial sales actually dipped slightly.
Oh, interesting. And broader market stuff like interest rates.
Yeah, Fed decisions, economic news, that always impacts high growth, high valuation stocks like this. Rising rates make future profits less attractive today.
This whole situation, the hype, the high price, the risks, reminds me of that ARK Invest example the sources brought up from 2022-23.
Ah, yes, that's a fascinating case study. ARK Invest, a big tech fund, sold Palantir shares in early 2022 when the price was around $10 to $13.
And then
the stock dropped significantly after that, bottoming out below $7. But then ARK started buying back in May 2023.
At what price?
Around $17. So they sold near the lows and bought back higher, just as it started its big run-up.
Wow. Even the pros find market timing incredibly hard. Sold low, bought higher.
It really shows you, right? Different views, difficult timing. It highlights the risks we're talking about now. Volatility, valuation. Nobody knows for sure.
Such a key lesson. Don't just follow the herd or famous names. Understand the fundamentals yourself.
Exactly. Okay, so pulling it all together, what's the summary picture from the sources for our listener?
Well, it seems like you have a company with genuine momentum, AI, government, commercial growth, that's real. Financials improving, the business looks solid.
But, and it's a big but, the stock price is reflecting sky-high expectations for the future. That means high valuation concerns and high volatility. The price can swing wildly.
So what's the takeaway for you?
Potential is there, definitely. But the risk is also significant because the price is already so high. It's sensitive, it could keep climbing, or it could drop sharply if growth doesn't perfectly match those huge expectations.
Key insights from the sources seem to be, understand the business and the valuation risk. Don't just chase the price.
And manage your risk. Maybe consider strategies like buying smaller amounts over time, rather than going all in at once, especially at these levels. Be mindful of the price.
So it's that classic balance, exciting growth story versus potentially stretched market price.
Precisely. Potential is clear, but so is the potential downside if expectations aren't met or exceeded.
Which leads to our final thought. Given that today's price already seems to demand enormous future success, what would Palantir actually need to do to beat those expectations? And what happens if growth is just, well, great, but not quite the miracle the market seems to have priced in?
That's the million-dollar question, isn't it? Or maybe the billion-dollar question here. Something to really ponder if you're looking at this stock.
Definitely something to consider. We've explored the sources, the upside potential, and those significant risks around valuation and volatility. Hopefully this gives you a clearer framework.
Use this as a starting point for your own thinking.
That wraps up this deep dive. Hope it was helpful. Welcome to the deep dive. Today we're jumping right into a company that's really been making waves, Palantir, ticker's PLTR. Even if you're not deep into stocks, you've probably heard the name. It's been all over the news, the charts.
Absolutely. Hard to miss.
So our mission here is simple. Cut through that noise. We want to figure out what's really driving Palantir's recent, surge, and what it means for you, especially if you're just trying to get a handle on this stuff.
Exactly. We've got the reports, the analysis. Our job is to distill it, give you a clear, balanced picture.
Balanced is key.
Right, because there's definitely exciting potential there, but also, complexities. We want to lay out the facts, the upsides, and the potential hurdles.
Okay, let's dive in then. Palantir's stock performance. It's been, pretty incredible lately. What's actually behind this surge? Can you break down those numbers?
Yeah, incredible is the word. It's been quite a ride. Just in the last month, maybe around 10% gain, but zoom out a bit.
Okay.
Year to date, so since January, we're talking a significant 84% jump.
84%.
Wow. And hold on, the past year, it's something like 437% gain.
400. Okay, that's staggering. Quadrupled in a year.
Pretty much. That gives you a sense of the momentum we're seeing.
So what's that mean in terms of market activity? Are lots of people trading it?
Oh, absolutely. Massive interest. Take June 13th, for example. The daily trading volume shot up by 68%.
68% in one day.
Yeah, and the value traded was huge, something like $128 billion. That tells you institutions, individuals, they're all actively involved.
Right, and that pushed it to a new high.
It did. Around June 17th, it hit that all-time high, touching the $136 to $140 range.
An all-time high. So are analysts thinking it could go even higher?
Some definitely are. You hear technical analysts, the ones looking at charts and patterns, they're eyeing maybe $210 as the next sort of ceiling or resistance level.
Resistance level.
Yeah.
It's like a point it struggles to get past.
Exactly. If it breaks through that $210 mark, it often signals more strong upward movement could be coming. But, it needs continued buying interest for that.
Gotcha. Okay, so the numbers are clear, but what's powering the business itself? What are the fundamentals driving this?
Well, the big story is really AI, artificial intelligence, and defense contracts. They've been landing and expanding AI platform deals, especially with the U.S. Department of Defense.
That's the Maven system.
Precisely, the Maven Smart system. News around that contract alone gave the stock a 4% bump. Shows how sensitive the market is to these wins.
And it's not just DoD, right? Are they winning elsewhere?
Yeah, good point. It's broader. They got a $30 million contract with ICE, Immigration and Customs Enforcement, solidifying that government footprint.
Okay.
But also key partnerships in the private sector. Think XAI, TWG Global, using AI for financial services. So they're diversifying.
Right, government and commercial. How's that commercial side looking? Is it growing fast too?
Oh, definitely. Their U.S. commercial revenue, up 71% year over year. 71%.
Wow.
And overall commercial, including international, is up 68%. And it's not just one or two big fish.
It's spread out.
Yeah, they've got nearly 600 customers now, over 130 contracts worth more than $1 million, and about 30 over $10 million. So it shows they're scaling, getting their tech into lots of big companies. Real value there.
Okay, so strong growth, clear momentum, big contracts. Sounds pretty compelling, but, there's always another side. What are the potential risks or red flags folks should be aware of here?
Right, that's the crucial next step. And it really comes down to, valuation. The price of the stock compared to the company's actual earnings.
Okay, valuation. You mean like the PE ratio?
Exactly, the price to earnings ratio. Basically, how much are investors paying for each dollar the company earns?
And for Palantir, what's that look like?
But, it's high, very high. That's the red flag for some. The trailing PE, looking back at past earnings, is around 600.
600 compared to what normally?
Well, a typical healthy range might be, 15 to 30 maybe, so 600. Yeah, it means investors are paying a massive premium. And even looking forward, the forward PE, based on estimates, it's still up there, maybe 200, 210. Some reports even say 250 times earnings.
So overheated is the word analysts might use.
That's exactly it. It suggests investors are banking on absolutely explosive future growth, which is great if it happens, but it means there's very little room for error. Any slip-up, and the stock could correct sharply. High risk, potentially high reward.
Makes sense. It's all about future expectations being priced in. Are there other risks besides the financials?
Yes, definitely. Given what Palantir does, handling large amounts of data, often for governments, there are political and regulatory risks too.
Like scrutiny over data use.
Right. There's been scrutiny, for instance, from lawmakers about their contracts with the previous administration, raising privacy concerns, talk of a mega database.
And that kind of scrutiny, it's not just bad press. It can actually impact the business.
It potentially could, yeah. It might affect future government deals, maybe lead to tighter rules, or even make some potential clients wary. It adds a layer of uncertainty.
Okay. And what about all that trading volume we talked about? Is there a downside to that?
Well, high volume means high interest, which is good. But it also means things can swing quickly. More potential for volatility, sharp ups and downs, especially if short-term traders decide to take profits.
Got it. So incredible growth story, but balanced by these very real valuation and regulatory concerns. How should someone, maybe new to this, sort of process all this? What's the takeaway?
Well, boiling it down, Palantir has undeniable momentum from AI and big contracts. They're innovative, expanding, capturing a lot of excitement.
What?
But the valuation is stretched thin. The price is way ahead of current earnings. suggesting significant risk of a pullback if growth doesn't meet those super high expectations.
So if someone is considering it, are there different ways to approach it based on, say, how long they plan to hold it?
Yeah, the sources suggest a few angles. For the short term, like the next week or two, it's about trying to ride that momentum. But, and this is key, set clear exit points to lock in any profit because of that volatility.
Okay, clear exit points. What about midterm, say a few months?
For the midterm, maybe 1 to 3 months. The thinking is more around divided purchases. Don't go all in at once. Buy in stages to average your price. And keep a very close eye on that valuation, and crucially, watch for new contract news. That's the fuel.
Divided purchases, watch contracts. Got
Yeah.
it. And long term, 6 months plus.
For the long term, it's similar. Divided entry is still advised.
Mm-hmm.
But the key advice there is maybe wait until those big contracts really start showing up in the earnings numbers, and until the valuation perhaps cools off a bit, becomes more, sustainable, waiting for the business reality to catch up more with the stock price hype.
That's really helpful breaking it down by time frame. It does raise that big question, though. How do you personally balance that exciting potential, which Palantir clearly has, against those warnings about the price and the risks? What stands out most to you?
Yeah, that's the core tension, isn't it? For me, it's this clash between the market's huge enthusiasm for anything AI-related right now and, well, the traditional math evaluation. It makes you wonder, are the old rules changing, or is this just classic market exuberance that'll eventually settle down?
A fascinating dynamic to watch.
Definitely. It really underscores that even with the most exciting stories, you need to look carefully at both the dream and the price tag attached to it.
A great point to end on. Welcome back to the deep dive. Okay, let's get into it, because there was definitely some significant positive momentum for Palantir just this past week.
There really was.
One of the biggest things, I think, landed on June 26th. Palantir announced this major collaboration. It's with a company called, appropriately, the Nuclear Company.
Mm-hmm.
They're working together on an AI platform specifically for building nuclear power plants. They're calling it the Nuclear Operating System, or NOS.
And what's really interesting here, it's not just, another contract. It's the strategy behind it. This isn't just more government work.
Right.
It shows Palantir is trying, quite deliberately, to weave its AI into really critical national infrastructure. I mean, think about it. Nuclear energy.
High stakes.
Exactly.
Yeah.
It needs incredible precision, safety, super tight regulations. An AI system like this, like NS, it could genuinely change the game for efficiency and safety. And that's huge for global energy, for climate goals.
Mm-hmm.
So this move, it sort of insulates them a bit from just relying on government contracts, right? It opens up potentially stable long-term revenue in a sector that's, well, heavily regulated worldwide. It says a lot about where they want to go.
And the market definitely reacted to that ambition. We saw the stock jump pretty fast, from $143.78 to over $145 almost immediately after the news broke.
A very direct link there.
Yeah, clear cause and effect. And if you zoom out a bit, look at 2025 so far, Palantir stock is up roughly 89%.
89%.
That's a huge return in less than 6 months. Clearly the market's buying into their story.
Absolutely. And part of that really fast climb, especially in the shorter term, well, some of that's likely short covering.
Okay, explain that a bit for folks who might be newer to this short covering.
Sure. So basically, short selling is when investors borrow shares, sell them on the open market, and they're betting the price will fall.
Hoping to buy them back cheaper later.
Exactly. Buy low, sell high, but in reverse order. They sell high first, hope to buy low later, return the borrowed shares, and pocket the difference.
Got it. So if the stock starts going up instead, like Palantir's did, they're in trouble.
Precisely. They start losing money. So to stop the bleeding, or maybe even lock in a small profit, if the price bounced after they shorted it, they have to buy back those shares they borrowed.
Wow.
That buying action, that's the short covering. And it adds more buying pressure to the market, which can push the stock price up even faster.
Right, like pouring fuel on the fire?
Kind of. And with Palantir, we saw the percentage of shares being shorted drop quite a bit, from around 5% down to just 2% this year. That's a pretty clear sign that short covering was helping drive that rally.
That makes sense. So it wasn't just optimism, it was also forced buying from the skeptics.
In part, yes.
Okay, what else was feeding into this? You mentioned institutional demand.
Yeah, another really important piece here is the buzz around Palantir possibly being added to the Russell 1000 index.
Okay, the Russell 1000, that's one of the big ones, right? Tracks the top 1,000 U.S. companies.
Exactly. Highly influential. So if Palantir gets added when they rebalance the index, which happens periodically, Well, think about all those passive funds.
Like ETFs and mutual funds.
Right, the ones that just automatically track the Russell 1000.
Yeah.
They will have to buy Palantir shares to match the index. It's not optional for them.
Wow, okay. So that creates this guaranteed wave of buying regardless of what individual investors think at that moment.
Precisely. It's a big structural tailwind. Can really lift a stock.
That's fascinating, almost like pre-programmed demand.